Once again, a very good morning, ladies and gentlemen. I'd like to thank you so much for your attendance this morning. Let me welcome those who have just joined us as we still wait for more people to log in, but they will find us as we proceed because we were starting at 11:10 and now it's a minute after 11. So I'd like to request that let me welcome first our trainer for the day, Madam Monica Magothe. I hope you can hear me. Please unmute yourself. We confirm that you're audible. Would like to thank you for your time, allowance to be with us this morning. I would also like to thank the attendees. Thank you very much. I can see the chat boxes, the chat box messages. Thank you. So ladies and gentlemen, our dear esteemed taxpayers, we shall begin in a few minutes. Let us allow our trainer, Madam Monica Magothe, to just put in her presentation for us. So for any questions that come throughout this training or any of the queries that you had prior to this training, please put them out on the chat box. We have a chat tab tool on the devices that you're using, and you can be able to type it out. We are going to read them out at the end of this training session. So would like to welcome you once again, and we shall be beginning in a few minutes. Thank you. Once again, a very good morning. Wellington and Esbon, we are back. I think you can, if you're able to hear me, please confirm. Madam Monica, please confirm that you can hear me as well. Let me welcome each and every one of you. Thank you for your time, even for those who have just joined in now. We are just about to begin our training session on withholding VAT and withholding income tax. Madam Monica? I think I've lost you. Just confirm that you can hear me.
Good morning. I hope you do hear me. Kindly confirm that you're able to hear me.
Very good morning, Monica.
Yes.
We can now hear you.
Okay, thank you. You can see my screen.
Just a minute. I was sharing. Let me just stop it so that I can give you the opportunity to go ahead and share. So as you're doing that, let me just be welcoming the more attendees who have just come in. You may please project. So ladies and gentlemen, thank you very much for your patience. We are just about to begin. We are trying to sort out our trainer for the day, our tax expert, Madam Monica Magothe, who has finally been able to join us, and we can begin our training. So for those who have joined in late, please would like to let you know that we shall be handling our questions at the end of the training session. And I would like to now give Monica a chance to proceed and take us through the sensitization.
Thank you very much, Martha, and thank you very much to our attendees. You are able to see my presentation?
No.
Now,
Just share, and then once you put the share, you click on the share button, then you allow the sharing tab. You have to allow twice.
I think, Martha, we can use your screen. Let's just have you sharing.
We are able to see you sharing now.
You have seen it. Okay, thank you.
It's starting to
Good morning
share the
once
content from your
again.
end.
Okay, thank you very much, and welcome once again. And I'm very sorry that we have had a few hiccup here and there, but we will be able to go on. Thank you for your patience, and thank you for taking some time to show interest in taxation. We are going to do withholding VAT and withholding VAT and also withholding income tax. And this is for real estate and property dealers. So we start, and we will start the disclaimer. Training is every effort for KRA to make simple the tax laws. But should anything that we are going to say in this presentation contravene any provision of the tax law, then the revenue laws shall prevail. So let's start with VAT, and we start with introducing the laws that administer VAT. VAT has gone through a number of changes since it started. And in the 90s, so many rates. Until now, until the last we had is the VAT Amendment Act of 2013, which is in force, and it is the main law that administers VAT or under which VAT is governed.
Monica,
Also, yes.
Monica, sorry to stop you. The content seemed to be hanging. It's not sharing. It's just pausing on share content. However, it's not moving.
You don't see I'm at the introduction.
No. It's just white screen. So maybe just share what you could do. You can share it with me. I can project it from my end.
That is okay with you. If you share for me, just a moment as we do that. And maybe as we do that, or as we sort that issue, maybe we can talk about other areas that KRA is interested in as we are sorting this issue. Just a moment.
That's okay, Madam Monica.
Share her screen, or rather to share the screen.
Ladies and gentlemen, I think we will need to. We have lost Madam Monica. So we have had to move her to a different device so that we can be able to proceed with the training. So we shall be starting with a disclaimer. We shall proceed from here before we start on the introduction to VAT and withholding taxes, both income and VAT. So allow us just 2 more minutes to be able to sort her out.
Once again, thank you for your patience. My name is Monica, and we had initially said that this is our every effort to make sure that tax laws are as understood by everyone as much as possible. However, should we say that anything that is contravening to any provision of law, then the law will prevail. And we start with introducing VAT and the law that govern VAT. VAT has gone through a series of changes from the moment it used to be sales tax, has grown with a varied rate. And then the VAT Amendment Act of 2013 was introduced, which now is the main law that govern VAT. Along with this, there's also the Tax Procedures Act. And the Tax Procedures Act basically will spell out the way what should be done about the various liability, the tax obligations and liabilities that the taxpayer has, and probably that the ones that KRA has on the taxpayer. And this also ties quite with the East Africa community, East Africa East Africa Community Act, the Access Duty of 2015, and Finance Act. Finance Act is the changes that takes place every year. So I talked about the way VAT has changed from the 1990s to the current VAT Act of 2013, which was brought in place in 2nd of September of 2013. Imposition of tax is exactly where is the mandate for charging VAT. And the mandate for charging VAT is under the Section 5 of the VAT Act. You can look at for VAT Act, you can even look for it online, and it's not a big act, and it's also in a very simple English language. VAT is a consumer tax. When we say that VAT is a consumer tax, it means VAT is paid by a person who is consuming. And the person who is consuming is not a person who is in business. So you only bear the burden of VAT if you are a consumer. Anyone that is buying anything for furtherance of business or furtherance of production, that person does not, or rather does not pay the VAT. And also it says on taxable goods and services, which again means that for purposes of VAT, we do have goods and services that are taxable, and we do have others that are not taxable. Should be charged by people who are registered only. Not every other person is supposed to charge VAT. People are registered for VAT, and when they are registered, they need to charge VAT on their customers who collect this VAT on behalf of the government and submit the money to the government. So principles of VAT, we talk about the registration. The law provides that if your supply for a year has reached 5 million, or you do expect that your supply in a period of 12 months is going to be 5 million and over, then you are eligible and the law compels you to register for VAT. And you register for VAT within 30 days from the date that you become taxable. And becoming taxable is reaching 5 million or realizing that you're going to be over 5 million. So once when you're registering, you do it online, and then it will be reviewed and approved. Once you're registered, you're supposed to declare your transactions on a monthly basis. Then you do this online. You file a return that is done online and is filed every month. Once you do, if you have any payment to do, you will also generate a payment slip online for which you can pay through the bank, or you can pay through M-Pesa. Let's talk about tax point. And tax point for VAT purposes is the time where tax is deemed to be due and payable. When this time comes, anything that relates to this transaction, then we will say that tax is payable. And even then, even collection measures can be taken to make sure that that tax is paid. Business transactions don't happen in a similar manner. That's why we do have tax points to take care for all business scenarios. Some people will come and deliver goods or perform services. Some will come and review the work. After reviewing the work, they will give an invoice. Some will come and will require that you pay a deposit. So, or you make some payment that is either in full or in part. So the following four, whichever happens earliest, tax that is due from that tax transaction is payable. Number one is date of issuing an invoice. Number two is date when goods are delivered or services are performed. Number three is when you have received part or payment or full payment on account of a given supply. Number four, data certificate is issued by an architect. This one is usually, the fourth one is usually for people who are in the build industry, who will most of the time come and review the work. And after that, reviewing the work, they give a certificate. So when these people have issued this certificate, tax that is due from that transaction is payable. The operations of VAT. How does VAT work? Remember when we started, we said VAT is a consumer tax. That means the more you consume, the more tax you pay. And also, it means that if you're in business, you're not paying tax. So how does this ensure that the person that is in business, and remember, VAT is only being charged by the people who are in business. These people who are in business are not going to incur the burden of tax because they are not final consumers. So how does it work? So it operates on the principle of input and output. So when you are a registered person, you're supposed to maintain a record of your transactions. That is, be it sales, be it purchases. When you have the record of your transactions, you will have record of all the tax that you are charged when you brought goods or raw materials, or when you are making your business successful. This is called input tax. Then we have VAT on sales or revenues. Once you have gotten your product, or it is even in manufacturing, you've gotten your raw materials, you have brought everything, you've paid for electricity, for water, for raw materials, any other machinery you have had, and you have finally produced a product. And then when you're selling this product, you charge tax on your customers, be it your other businesses or be it consumers. This is called output tax. And then for the registered business person, they are going to pay the difference between output tax and input tax. Maybe we can give an example. If you are in a business, you have got a product for 100,000. That is the cost of that good. You've been charged 16% of that product. So you have paid 116,000. But remember, we said 16,000 is input tax. You were charged the input tax by the person who sold to you, but the actual cost of goods is 100,000. And because you're in business, the cost of that good to you is 100,000. But you paid 16,000 when you were you were charged 16,000 VAT. And then this product, you want to put a 10% markup on it. So 10% of 100,000 is 10,000. So how much are you going to sell this product? You're going to sell it at 110,000. You're going to charge 16% on the 110,000. The 16% of the 110,000 is 19,200. So what do you pay to KRA? Input tax, you are charged 16,000 by the person who sold you your raw materials. They charged you 16,000. Output tax is what you charged your customers. So you charge them 19,200. And you're going to submit to KRA the difference between output and input. What is the difference? Output was 19,200, input was 16,000. So to KRA, you're going to submit 3,200 as tax. It is the interest of every other business person that they will buy more than they will sell. Or rather, their cost of business, the cost of their input is going to be lower than the cost of their output. Therefore, they would want to wish to maintain a positive difference. That is between output, like we have said, the 19,200 minus 16,000. However, months are different. There are months that you may buy more than you will sell. So maybe there's a month when you are getting your products, you are charged 19,200, but you charged 16,000. That means you paid more VAT in a given month than you charged less VAT than you are charged. In that case, you remain in a credit. The 3,200 is called a credit, which you carry forward to the next period. When you carry forward this credit, it is going to offset your future tax liability. So if you carry 3,200 this month, and then the following month you do your returns, you're supposed to pay 8,000. So the 3,200 will reduce your 8,000. So you will pay the difference between 8,000 and 3,200 because you have carried forward a credit that is going to be used to offset your future tax liabilities. So we can talk about classification of goods and services. And for purposes of VAT, we have two classifications. We have exempt and we have taxable. When something is exempt, it is not subject to VAT at all, and it does not attract VAT. Goods that do not attract VAT are listed in the VAT Act of 2013. That is the first schedule. Part 1 lists goods. Then Part 2 of the same Act, of the same schedule, lists exempt services. Examples, we have live animals and processed milk, edible vegetables, raw groundnut, etc. Like especially the firmware, what we get from the farm, and we have not done any value addition. You have harvested your beans, you have harvested your sukuma wiki, you've just milked your cows. This one and has not been added anything. It's not the milk that we buy in packets, the ones that has not been processed. Most of these are exempt. Taxable. Taxable means something is subject to VAT, and we have three rates of taxable supplies. Number one, we have 0%. And 0% goods that are taxable at 0% are called zero-rated supplies. What is the difference between this and exempt? The difference is because for zero-rated, because this is a taxable supply, you are allowed to claim input tax on zero-rated. Unlike when something is exempt, you do not claim input tax. Then the next rate is 8%, which is largely for the petroleums and oils. Then we have 16%, which is the general rate. So these are types of the zero-rated supplies, which we have exportation of goods. When you make supplies to EPZ and special exporting zones, the privileged bodies, the maize flour, all these are zero-rated. We have exempt. These are exempt supplies. And a whole detailed list of exempt supplies and even zero-rated is they are listed in the first and the second schedule. You may look at that because this does not exhaust the list. Then we can talk about withholding VAT. And even before withholding VAT, we talk about withholding VAT, let's talk of generally the withholding tax. A withholding tax is a tax that is retained by a payer. Someone who is supposed to pay you retains some money from your payment as tax and as provided for in law. We have various types of withholding taxes. We have withholding VAT, we have withholding income tax, we have withholding rent. So these ones, payers of these transactions, they withhold at the point of paying. Where does the authority for withholding VAT comes from? That is the Section 25A of the VAT Act. Also with Section 42 of the Tax Procedures Act 2015. So withholding VAT is not in any way a type of tax, but it is a method of collecting VAT. And withholding VAT can only be done by an appointed agent, a withholding VAT appointed agent. For you to be able to withhold VAT, you must have first been appointed, and this appointment is done online. It's done in the system. You are appointed as a withholding agent where you will withhold. Once you withhold, you submit to KRA. And example of withholding agents are government ministries and agencies. We have also very many private businesses that have been appointed as agents. And this has been effective since 2014 September. At that time, it was at the rate of 6%. However, the rate changed with the Finance Act of 2019. It changed from 6% to 2%. Collection and enforcement. So we talked about tax points, and we said a tax point is a time where tax is deemed to be due and payable. If a tax is due and payable and has not been paid, then there could be collection and enforcement measures to make sure that these taxes are collected because they fell due at some point and they were not paid when they fell due. So Section 19 of the VAT Act 2019 provides for collection and Enforcement, along with the Tax Procedures Act, Section 32 to Section 46. It talks about how we will collect and enforce to actually recover the tax that is not paid. So, and we say tax is due and payable at the time of supply. So, and it becomes a debt payable immediately. When tax becomes due, it becomes a debt to the state, and this debt should be paid immediately. So when they are not paid, we have collection and enforcement measures, which will include agency notices. It will include distress action. It may include caveat. It may include any other to make sure that the debt that has been incurred against the government has been paid. When principal tax does not change, however, when tax is not paid, it also accrues interest of 1% per month. With VAT, when you're registered for VAT, you're required to maintain an ETR receipt for 5 periods. And maybe you may be aware of our Teams-enabled ETR machines, which should be in force, which have been in use for some time, but compulsory use of this is starting next month. So if you've not made, or rather not acquired, a Teams-enabled machine, or rather Teams-enabled ETR device, you may make arrangement to make sure that you comply. Then we have withholding income tax, like withholding VAT. For withholding VAT, you charge. Let's go back to our first example. You charge tax. You bought something at 100,000. You are supposed to pay. The person is supposed to pay you 116,000, and remember, 16,000 is tax. So at the point of paying you this money, because the person who is withholding is the payer, and they are withholding at the point of paying. At the point of paying you this money, they will withhold 2%. So they will withhold 2% of the 100,000, which is 2,000. So they withhold the 2,000 and submit to KRA. You'll be left to do your end of the month transaction, and you'll be able to claim this withholding, that the withholding tax that was withheld. It will reduce your tax liability at the end of the month. The same thing happens with withholding income tax. But unlike withholding VAT, withholding income tax, you do not need to be appointed as an agent. Withholding VAT, you must have been appointed. Withholding income tax, you don't need to be appointed. You only need to be a payer of the given type transactions that are being withheld. We have very many rates for VAT. For income tax, again, it has varied rates, and rate depends with even, are we withholding from a resident or a non-resident. So one of the most common transaction for which withholding income tax applies is management or professional fees. And this one, if you're making any payment to a person who is not your employee, for any service that they give you of managerial, technical, agency, contractual, whatever, or those or consultancy services, which however you calculate it, and they are not your employee, and you're paying them more than 24,000 in a given month, then you're supposed to withhold, and the rate for this is usually 5%. Then we do have contractual fee. This is for the people in the build industry, the engineers, the whoever, the surveyors, the architects. If someone is giving you this service, at the point of paying them, you're supposed to withhold 3% at the point of withholding. Consultancy fee, which is similar to like the management or professional fee, and you're paying someone that is acting as an advisor to you. So that one you will also withhold from them. We also have agency fees, and these are payments that you made to a person that is acting on behalf of another. This is when someone is an agent of another. We have treaties and management or technical fees. All these are subject to withholding tax. And Section 9A of the Tax Procedures Act, it gives you an obligation to withhold. When you're paying this transaction, you are compelled to withhold. You do not, it's not a choice that you make. As long as this is what you're making, you're supposed to withhold. So there's also withholding rent. We haven't included it in the presentation, but we do have withholding rent. And this is also done by appointed agents. So withholding VAT, withholding rent is done by appointed withholding agents. So someone will be appointed through iTax to become a rent withholding agent. When you are appointed as a withholding agent for rent, when you're paying rent to your landlord, you withhold rent, and the withholding rate is at a rate of 10%. So you will, if they are charging you 100,000, you will withhold 10%. That is 10,000. Then you will submit it. It will be credited in their ledger. They can claim it against their income tax return. And if they are doing the monthly rent income, they will also be able to claim it in that. So you may need to note about withholding rent, which is not in our presentation. Then this is all about VAT that we had today, and withholding VAT and withholding income tax. So we may talk about a few things that KRA has put in place to make tax compliance an easy journey. One of them is M-Service. An M-Service, it's an application that will allow Kenyans to access services like registration of PIN, like registering for rental property, filing their returns, do some transaction that they are unable to do it through their phone. That's why it's called the M-Service. Then we can talk about integrity in access to information, and it's good to highlight that KRA is highly committed and devoted to impacting high value or having high value employees who are able to comply with anti-corruption measures. And KRA has put very many measures to combat corruption. And these are some of the ways that KRA has put in place. One of them is automation of KRA functions. When there's automations, it means that there is a reduction of person-to-person interaction and an elimination of person-to-person interaction. Ensure that if you have done everything right, you do not need an intervention of someone. It's just a system to check this is done correctly, and therefore this should be like this. So the reduction of human intervention generally reduce corruption in a very great extent by eliminating person-to-person contacts. We have the taxpayers charter, and taxpayers charter will spell out the rights and obligations of the taxpayer. So as a taxpayer, you know your right, you know your entitlement. So even as you walk into a KRA office, you know that this is what you're supposed to get, and you know it should be given to you for free. So if you're given to be given in this number of days and should be given free. So when it is known to you in that manner, then you're not likely to, you will not be paying someone for services that are being given by KRA. Again, when you know your obligations, you know how best not to find yourself in a vulnerable position. Because you find that when people become corrupt, they become corrupt because they just found themselves in vulnerable position. But when your obligations are put to you, you know that this is what you're supposed to do, you do it in time, you avoid vulnerable moment, and therefore you safeguard your integrity. KRA has a department, it is called the Intelligent and Strategic Operation Department, which oversees all integrity functions in KRA. It will do lifestyle audits for staff. It will do vetting. It will do investigation of staff and also on taxpayers on tax evasion. We train taxpayers and the general public on integrity, like we are doing even in this forum. Investigation of staff and tax evaders. Then we do have the anti-corruption, gives and whistleblower policies, the informal reward. And the informal reward is a system where you are allowed as a taxpayer to inform KRA of any tax evasion plans that are happening. These tax evasion plans, when they are received by KRA, they will be investigated. This is what we should be going. They will be investigated. If tax is collected on account of the information that you provided to KRA, you're going to be paid 5% of that amount that was collected, but that would be subject to a maximum of 5 million. iWhistle, you can go through iWhistle, and it's basically a reporting through iWhistle, and you report tax evasion, you report bribery, you report any fraud, you report a conflict of interest, you report abuse of office, you report concealment, you report diversion of goods. So when you do, because we said this thing, the information you provide is investigated, so that again you do not have malice. So what you need to provide when you're making a report, you need to a financial record, that is profit and loss. You need bank statement, you need bank details, you need a PIN number, location, and contact of the violator. And this is again other redress mechanism. If KRA does not, if you're not satisfied with our services, or if you face a corruption situation or scenario, you can report to cic@kra.go.ke, or corruption reporting. You can walk in person to 26th floor. You can do it in writing to the Commissioner General. You can do that, Commissioner General, that is Complaint and Information Center. You can call the numbers that are on your screen. They are toll free. You can do iWhistle, which is iWhistle is anonymous reporting. And you go to iwhistle.kra.go.ke, you are able to report. So are all the numbers that you're able to contact us through. If in any case we do not satisfy you as much as you have wished, you can write to cic@kra.go.ke. You can write to the commissioner at cg@kra.go.ke. That's the end of our presentation. Again, thank you very much for being with me. What percentage are you supposed, Anna? I'm now going through I'm going through the question that have been put on the chat box, and someone has asked, what percentage are you supposed to withhold for consultancy fee? That is 5%. And this is if you're paying someone for more than 24,000 in a month and they are not your employee. Someone has said we elaborate on the withholding tax on the rental tax. Withholding tax on rental is not done by everyone. It should only be done by an appointed withholding agent. It is at 10%. Withholding rent is at 10%. And when someone withhold, not just withholding VAT, not just for withholding rent, when someone has withheld from you and they have paid, the amount comes into your ledger as an entry, a credit entry. Credit entries in our ledger marks where you have payment have been made. So when I've withheld from you and I've told you I've withheld rent from you, number one, you should be my tenant. You can't withhold when you're not my tenant. Number two, you must have been an appointed withholding agent. Not everybody is going to withhold rent. Number three, the money must be in my ledger. So when money has been withheld from me, whichever it is, income tax, VAT, rent, it must be in my ledger. When it is paid, it must be in ledger. For exempt goods, you have said, and I hope I hope I've answered the people who've asked the questions well. For exempt goods, you say they do not attract VAT. So my question is, do we pass the invoice through the new ETR teams? And if yes, how do you put VAT rate on exempt goods? For someone who is dealing with exempt goods only, not exempt goods only, they are not supposed to register for VAT because the goods that they deal with are not subject to VAT. So this person should not register. However, when you are registering, when you have maybe you have different kinds of goods. You have zero rated, you have 16%, you have 8%, you have exempt. There are people who are selling all this they have all these supplies to make. When you're buying an ETR machine, your supplier will fiscalize your device. When they fiscalize their device, the fiscalization is giving the instruction to the machine, these are the things that this person has. So once you have keyed in, this is the good that you have sold, it will already automatically identify it as an exempt. So that one it will be okay. But when you are when you buy the new ETR machine, it's good that you notify your supplier of all the goods you sell so that they can fiscalize the machine well, or they can program, they can program your machine well. Legal fees is subject to 5%. Someone has asked. It is withheld at 5%. As a consultant, how do you do your returns if you have withholding certificates? When you have a withholding certificate, let's say you sold goods for a whole year, you did supply worth 1 million. We talk about 5% of 1 million, it should be 50,000. So you will find that if all transactions that you took through were all withheld. You may not, it's not all transaction. Maybe you can come and you do a consultancy for me in a month of 2,000. So I'll pay you the 2,000 and I will not withhold. But supposing we are assuming that all your transactions had tax withheld from them. So from 1 million, 5% was withheld. So that is 50,000. When you will doing your return at the end of the year, you will declare your consultancy business, that is business, your business turnover should be 1 million. So when you say, when your business turnover is 1 million, you will still do your expenses as you are allowed for in section 15, and also disallowed in as allowed and disallowed in section 15 and 16 of the income tax. So you will claim all the allowed expenses. Then you will determine how much tax you're supposed to pay. At the very last page of your return, be it the individual return or the company return, you will be able to claim the 50,000. So supposing you've done your return and you have probably found that tax that is due from your transaction of the year is 80,000, then you will claim the 50,000 that was deducted from you and submitted to KRA. So you will pay the difference of the two. That is 80 minus 50, so you're going to pay 30. And when the withholding has been done and payment made, and that has been posted in your ledger, you will not even be able to submit that return until you have claimed the credits, or rather the withholding credits that were received from your the people you do business with, or the people you supply your services to. I have a client who is an architect, but they have registered tax at 5%. How come? Architects, maybe, I don't know, we, we, we said that the contractual fee is 3%. Remember, it is you who withhold, not them. When when you are my client, when I'm doing your business with you and I'm your client, you are paying me. So when you're paying me, you withhold. So when this is your client, when they are paying you, when you're paying them, when the architect is paying you, they are supposed to, and you're not giving them architect services. You see, depends with the architect is contractual. If you're not giving them contractual services, they should withhold at 5%. It is the nature of transaction that determines what is the rate of withholding, not who is withholding. If I'm an architect, I might run very many transactions. I can have employees, those one they be subject to PE. I'm still an architect. I can have consultants that maybe come to advise on other issues that are not in the build industry. Maybe I have a lawyer. The lawyer, I will withhold at 5%. I'm still the same as architect. Maybe I have a non-resident who is doing some business for me. When I'm paying them, I will be withholding for them and withholding for them at the rate of the non-resident. So when they are paying you and it is not similar services, if for you when you're giving them services, it is not architect, maybe you are a lawyer, they should withhold at 5%. And for you, if you are a lawyer, and for the fee for legal fees is 5%. However, should you engage an architect, you should only apply to them the services, the rate that is applicable for contractual, which is 3%. So it is not necessarily, maybe to really make this clear, it is not necessarily who is withholding that determines the rate, but the nature of the transaction that is being withheld for. I can be a doctor, but I'm withholding an architect. I will withhold at 3%. I can be a doctor, I am withholding for a lawyer, I will withhold at 5%. So I've withheld for two people at different rates. Someone has asked about monthly income rental returns. Monthly rental returns, maybe let me talk about returns. I didn't even talk about VAT returns. When you are registered for VAT, you're supposed to do your returns, and the returns are supposed to be done by the 20th of the following month if you don't want to incur penalties and even the payment. Equally for monthly rental income, when you have a residential rental property, monthly rental income is only applicable to residential property. If you do not, if the property you have is not residential, then you're not subject to monthly rental income. And if you also, monthly rental income has a ceiling. If your annual turnover or your annual rent for the year is over 15 million, then you're not supposed to be in the monthly rental income. You will file your return every month for rental income. The rate is at 10%. When you have a tenant, when you are a landlord and you have a tenant who is an appointed withholding agent, this tenant is supposed to withhold rental income from when they are paying you. I don't know if this is clear. I don't see any other question. Then it has been a nice time being with you. Once again, I apologize for the delay in our starting. We just experienced some technical hitch. I'm happy we were able to resolve it. I'm glad for your time and your patience. Do have a good day.